Hey there. So this CFPB website has a lot of good educational tools for first-time home buyers or home buyers that are just maybe haven't bought a home in a long time and are kind of not sure about the process. So one of the things I like on here is the loan estimate explainer. And you could just Google CFPB loan estimate explainer and this will pull right up for you. But it goes through and explains all the different things you might find on your loan estimate. So this is a pretty good example of a loan estimate that you might get if you're purchasing a home or refinancing a home. And I wanted to walk through and let you know what things you probably should look for if you are looking at a loan estimate, because a lot of people just sign these things and send them back to their lender without really even understanding what they are. So first and foremost, the loan estimate, you should check and make sure your name, and if you have a co-borrower, their name is spelled correctly, address is correct, the property you're purchasing, if it's a purchase, is correct, and the sales price. All that's right there. The loan term is a very important thing for you to understand. Are you doing a 30-year loan? Is it a purchase? Fixed rate or adjustable rate? This is where that will be shown there, because you don't want to think you're getting into a fixed rate and then all of a sudden you're into an adjustable rate mortgage. Whether you're doing a conventional FHA or VA loan, whether the rate is locked, and when the rate lock expires. Now, an important note here, this says 5 p.m. Eastern time. So if you're on the West Coast, your rate lock actually expires on this date at 2 p.m. Eastern time. So you probably need to know about that. So this gives you your loan amount. So these people are putting 10% down, 180,000 minus 162 is 18,000. That's 10%. I would love it if this was actually an available interest rate currently. Apparently they have not updated this for a while. This tells you what the monthly principal and interest is. That does not include, that's not your entire payment. That's just the principal and interest portion of your payment. That's the monthly cost of your loan. And then down here, you'll see if there's a prepayment penalty. Yes. See that now aren't a lot of loans with prepayment penalties, but this one does have one. Most of the time, this is going to say no. But this tells you if you pay off the loan during the first 2 years, you could have to pay back $3,240 as a prepayment penalty. Is there a balloon payment? Again, these loans are rare, but they are out there. So those are very important things to note. You want to double check and make sure none of these features are on your loan. And if your lender put these features on your loan and didn't explain them to you, you need to go find another lender. So this again is the principal and interest portion of your payment. Mortgage insurance, because you're putting less than 20% down, you're going to pay mortgage insurance. And then the estimated escrow, which is the estimate of your taxes and insurance. And this amount can increase over time. So if you're in a fixed rate, this will not. But this can increase over time because the lender does not control your insurance and tax costs. And then this is your estimated total monthly payment. And then it goes years 8 through 30. And the reason this is on here is because the estimate is that after 7 years, the mortgage insurance will no longer be a part of this loan. This will probably be different, but they don't have any way of knowing that. And then your payment goes down to $968. And again, this shows the estimated property taxes and insurance again. And it shows that it is escrowed and part of your payment, so you're not paying those separately. Now, if this home had an HOA, the other would be marked. It would say HOA and escrow no, because HOA is always paid separately from your mortgage payment. And then you have the estimated closing costs of $8,054. The estimated cash to close on top of their down payment is $16,054. So let's see how they get to that, and that's on page 2. So page 2 breaks down the detail of the closing costs. And this section is the loan-related fees. Now, there's very little tolerance in this case for loan-related fees. The lender can't say the underwriting fee is going to be $1,097 and then at closing charge you $1,300. They'll have to do what's called a cure and refund you that money. So these have to be pretty accurate for the lender. If the rate is locked, this has to be accurate. If it's not locked, this could change. But what points is the amount of money you're spending to buy down the interest rate. So the interest rate of 3.875% on this estimate or this example shows a $405 cost to the buyer in order to get that interest rate. So that's listed under here. Services you cannot shop for. These are third-party items that you don't have any say as to who we get these from. Again, we have to be accurate with these fees. So the appraisal fee, credit fee, flood determination fee, tax monitoring, and tax research fees. Those are things you cannot shop for. Services you can shop for. Now, as lenders, we are required to give you at least one recommendation. And if you go with our recommendation, then we have to be accurate with the fees again. But if you choose to go outside of our recommendation, or if your real estate agent chooses a different title company, then we are just estimating these fees until we have the actual fees from them. Now, in my case, I like to try to get the fees from the title company before I disclose. But there is some tolerance, and these can change off your loan estimate if you shop for people outside of the lender's recommendation. Just so you know, these are just an estimate at that point, but typically lenders try to be very, very close to what the actual number is going to be. In my case, I always tend to overshoot it because I'd rather you be pleasantly surprised than unpleasantly surprised by the title fees. So then you go up here to this section, other costs, government recording fees. If you're in a transfer tax state, those would be listed here. And then prepaids. Now, most states you're going to have to pay 12 months of your homeowner's insurance up front. Mortgage insurance premium up front would be if you do an FHA loan or a VA, they might have the funding fee listed here. Prepaid interest. So anytime you close on a mortgage, you start accruing interest the day you close. So for example, if you were to close on September 15th, your first payment would be due on November 1st. So for that, you would have 15 days of interest that you would have to pay up front. In this case, at this very low interest rate and low loan amount, that's $262. In reality, that number is going to be a little bit more because prices are higher than that and interest rates are higher than that. And then if there's property taxes coming due, you might have to pay for some of the property taxes as well. And then this is your initial escrow. If you choose to have an escrow, or in most cases, you may be required to have an escrow account because you're not putting enough money down, then the lender is going to collect a little bit of a buffer to make sure that they have enough money to pay those when they are due. So this isn't due for 12 months, but you're only going to make 10 payments prior to the renewals. So they collect 2 months. And same thing with the property taxes. You may only be making 4 or 5 payments prior to the property taxes coming due. So they're going to collect a buffer to make sure they have enough money to pay that. This is additional title fees. And then here is the total closing costs. If there are any lender credits, those would be listed here. And then if you go calculating the cash to close, your total closing costs, your down payment minus your deposit is $16,054. So they're not getting any concessions here from the seller. So they're paying the $18,000 down payment, the $8,054 in closing costs and prepaids, and that's a $16,054 cash to close. So that gives you a pretty good idea of what to expect. And of course, this number isn't going to be perfectly accurate because fees may change. There may be some credits that aren't included. You may end up negotiating after the inspection to get some credit from the seller. So this might not be the written in stone number, but it gives you a really good estimate of what to expect at closing. And then on page 3, this is a page that is largely ignored, but it has a lot of good information on it. So this tells you in 5 years how much you're going to pay on your mortgage and how much of that is actually principal. And then it also tells you the APR. The APR is very important. And the reason the APR is very important is because this is the rate and fees associated with the loan expressed as a percentage, and that is intended to make it easier for you to shop for a mortgage. So if you had another estimate from a company and their APR was 4.5% versus this 4.274%, that company has more fees associated with the loan, and therefore you probably end up with a higher cash to close. Now, one of the things that's very important to note, go back to page 2 here, a lot of times, and you have to watch for this, when lenders are sending a closing cost estimate before there's a property and a closing date, they'll manipulate this prepaid interest to make their cash to close look a little bit lower. They'll say, oh, 1 day of prepaid interest. Well, it's not 1 day of prepaid interest. If you're closing on the 15th, it's 15 days. If you're closing on the 10th, it's 20 days or 21, depending on what month you're closing in. So it's important that you're keeping an eye on this. If you're getting what I call a TBD estimate, which is I don't have a property yet, but I just need to know what your closing costs would look like because I'm shopping lenders. Make sure that the lenders that are giving you these are giving you a 15-day estimate just because that's the median and that's the average. If they're giving you 1 day, they're probably not being overly honest unless you know for sure you're intending on closing on the last day of the month. Okay, so back to page 3. And this is the total interest percentage. So you'll pay on this particular loan, and this number is going to be higher these days with higher interest rates. 69.45% is the total amount of interest you will pay over as a percentage of your loan amount. So again, that's just good information for you to have. And then some other considerations: we may need to order an appraisal. Okay, and we will be promptly give you a copy of the appraisal even if your loan does not close. And you can pay for an additional appraisal for your own use at your own cost. And that's basically saying we can't just order a new appraisal because you didn't like the first one. Assumption: this will tell you whether or not your loan is assumable by a new buyer should you choose to sell the house down the road. And you may have heard of loan assumptions over the last couple of years, some people with some low interest rates allowing buyers to assume their low interest rate loan to sell their house. In this case, this is not an allowed assumption. This tells you that you are required to keep homeowners insurance on the property, and you can choose whoever you find acceptable. Just a note on that: if you do not, or if you let your homeowner's insurance lapse, the lender will put forced place insurance on, and it will cost you more money. This tells you that if your payment is more than 15 days late, you're going to be charged 5% of the monthly principal and interest as a late fee. So it's important to try to pay your payment before the 15th of every month. And then we do not intend to service your loan. So this particular lender intends to transfer the servicing of their loan to a different company, which is pretty standard. But if they are going to hold on to the servicing of their loan, it will be marked here, so you will know this is where your payments are going to be made. In most cases, they do intend to transfer the servicing of the loan, and once they do that, they will notify you where to make your payments once the new servicer picks up the loan and has it ready for you to make payments to them. So I hope that helps. And we also have the closing disclosure estimate or explainer on the CFPB website, which we'll go over here shortly. But this is really good information for new buyers and people who want to learn a little bit about the buying process and things you need to look for on your loan estimate when you get it from your lender. Take care, everybody. If you have any questions, call, text, email, direct message. I appreciate it. Have a good one.